A stronger U.S. dollar continues to put pressure on gold prices as Jim Wyckoff joins us today on this edition of Technically Speaking. Jim, how are you?
Good morning, Alex. Always nice to be with you.
So, Jim, gold has had some struggles recently this week with the U.S. dollar rallying. Now, we had some data points out this morning that didn't really affect gold prices too much. Is this really a U.S. dollar story?
Alex, the gold and silver markets, as well as the raw commodity sector, has been held hostage recently by the daily machinations of the U.S. dollar index. And most of the time, the dollar index has been appreciating. The strong rally has been a major bearish weight on the raw commodity sector, including gold and silver prices. And you're seeing downtrends in place.
Now, do you see this recent rally with the U.S. dollar as sustained? Will it continue to weigh negatively on the commodity markets?
Actually, Alex, the dollar index last week's price action was very important. We had seen some downside price pressure on the index that gave some very early indications that it may have topped out. But then last week, the dollar index came roaring back, produced a bullish weekly high close last Friday, which gave the bulls fresh technical momentum. Now the technical posture of the dollar index is such that prices will probably challenge the springtime highs, if not push above them, and that is a bearish, very bearish element for the raw commodity sector, including the precious metals.
Now, switching over to important data points, we've seen gold react negatively or positively to some economic data that has come out of the U.S. in the recent months. Q1 GDP tomorrow, do you see some volatility there?
You know, Alex, we could see volatility if the GDP number is a miss from expectations. However, I think first quarter GDP, we just had a Fed official overnight say that the weak GDP readings for the first quarter were an anomaly. So if we get a weak number on Friday, I don't think the marketplace is going to take too much credence from that. If it's exceedingly weak, then maybe that's a different case. But I think what the marketplace has done is they're looking, the first quarter's past. That's history. We're looking ahead. And U.S. economic data has improved in recent weeks to the point of suggesting the Federal Reserve will raise interest rates this year, probably in September. Also, at the same time, the other major central banks of the world are working on easing their monetary policy. So that divergence has really been fuel for the U.S. dollar index bulls here.
All right, Jim, let's get to your market ratings for gold and silver this week.
Alex, I'm giving August COMEX gold a Wyckoff's market rating of 2.5. That's firmly in the bearish camp. The bears this week have gained fresh downside momentum. Solid overhead resistance at 1,200. Solid support at the recent low of 1,170. Looking at July COMEX silver, Wyckoff's market rating of 3. That's significantly down from last week. The bears have retaken command of the silver market, and overhead resistance is at 1777. Technical support at 16.
Thanks as always, Jim.
All right, Alex, take care. Talk to you next time.
And thank you for watching this edition of Technically Speaking. As always, comments and questions are welcome at newsfeedback@kitco.com. Have a good one.